If you've been watching the charts for the last 48 hours, you're probably either looking for a stiff drink or you're grinning from ear to ear because you've been waiting for this exact moment to back up the truck. Look, I'm not going to sugarcoat it. Yesterday, February 12th, 2026, was an absolute bloodbath in the precious metals market. We saw a move that made the 2008 volatility look like a walk in the park. We are talking about a total, unadulterated flash crash that wiped 10% off the value of silver in a single trading session. 1 minute we're sitting pretty, knocking on the door of triple digits, and the next, we're watching the floor fall out from $85 all the way down to $74. If that didn't make your stomach drop, you're officially made of stone. Welcome back to Collapse Now. I'm your host, Keo Nate, and today we are diving headfirst into the wreckage of this crash to figure out if we're witnessing the first real crack in the global economic foundation, or if this is the ultimate buy the dip opportunity before we hit that legendary $200 price target everyone has been whispering about. Before we go any further, I have to give you the standard reality check. I am not a financial advisor. I'm just a guy who loves stacking metal and reading the tea leaves of an economy that feels like it's held together by duct tape and prayers. This video is for entertainment and education. Do not take out a second mortgage to buy silver just because I'm hyped up on a YouTube video. Silver prices can swing like a pendulum in a hurricane, and you could lose your shirt if you don't know what you're doing. Talk to a professional, do your own homework, and remember, the markets can stay irrational longer than you can stay solvent. Now, if you're ready to see what's really going on behind the scenes, do me a huge favor, smash that like button, hit subscribe if you haven't already, and turn those notifications on. We are dropping news every single week because, let's be honest, in 2026, a week feels like a year with how fast things are moving. I also want to hear from you in the comments right now. Did you panic sell or did you buy the dip? Tell me your price targets for the end of the month. Let's set the stage here. We have been on an absolute tear for the last 14 months. If you remember back to the start of 2025, we were all celebrating silver hitting $30 and $40 an ounce. It feels like a lifetime ago, doesn't it? Since then, we've seen silver climb 150% year over year. We saw the impossible happen in January when we shattered the 100-ounce ceiling. People were calling it the silver squeeze of the century. The Silver Institute even noted that we saw an 11% jump just in the first few weeks of this year. But when things go up that fast, gravity eventually wants its share. Yesterday morning, the ticker was at 82.49. By the afternoon, it was a race to the bottom. Today, we're seeing a bit of a relief rally, with prices bouncing between $78 and $83. But the question remains, why? Why now? It was a perfect storm, a literal convergence of every nightmare scenario for a trader. First, you had a massive sell-off in tech stocks. The AI hype that's been fueling the Nasdaq for years finally hit a wall. And when big tech tanks, margin calls follow. When institutional investors need cash fast to cover their positions, they sell what they can, not necessarily what they want to. Silver is liquid, it's valuable, and it was the first thing on the chopping block. Then you have the geopolitical side of things. We've been hearing these re-dollarization talks coming out of Moscow and Beijing. If the world thinks Russia is easing up on its push to kill the dollar, that safe haven demand for silver takes a temporary hit. On top of that, we got that delayed jobs report from January, thanks to that mini government shutdown, showing that we added 130,000 jobs. That sounds good, right? Wrong. For us, that means the Fed isn't cutting interest rates anytime soon. And as we know, when rates stay high, non-yielding assets like silver have a harder time competing. But let's look at the bigger picture because this crash isn't happening in a vacuum. The US economy is currently a house of cards. We're sitting on over $38 trillion in debt. The Congressional Budget Office just released their outlook, and it's enough to keep you up at night. They're projecting our debt to hit 120% of GDP by 2036. We are running deficits of nearly $2 trillion a year. Think about that. We are spending money we don't have on interest payments that now exceed our defense budget. It's a debt spiral, plain and simple. When you see a flash crash in silver, you have to wonder if it's the canary in the coal mine. Back in 2008, we saw metals dip hard, right before the systemic reset happened. Are we seeing a repeat? Are investors smelling a liquidity crisis before it hits the mainstream news? Dear Ad, before we get into the industrial side of this, I want to take a second to talk about the physical reality of what we're holding. This isn't just paper on a screen. The Silver Institute is reporting that we are in our 6th straight year of a physical silver deficit. We are short about 67 million ounces this year alone. Why? Because the world is hungry for silver. Your solar panels, your electric vehicles, the AI chips that everyone is obsessed with, they all need silver. And since January 1st, China has been tightening the screws on export bans. Inventories at the Shanghai Futures Exchange have dropped 54% in just a few weeks. The COMEX is sitting at record lows. We are looking at a situation where there is a massive disconnect between the paper price you see on Kitco and the physical price you pay at your local coin shop. If you try to go out and buy a 100-ounce bar today, you're going to be paying a massive premium because the physical metal just isn't there. This is where the doom meets the boom. If the economy actually cracks, if we see the default crisis that the CRFB has been warning about, silver isn't just an investment anymore. It becomes a life raft. When the dollar loses its luster and the debt hits $40 trillion, people aren't going to want digital digits in a bank account that can be frozen or devalued overnight. They're going to want something they can hold. We are seeing household debt at all-time highs. Credit card balances are jumping by $44 billion in a single quarter. The average American is tapped out. If the consumer stops spending, the economy stops growing. If the economy stops growing, the debt becomes unserviceable. It is a mathematical certainty that something has to give. So, is $75 the new bottom, or are we going back to $40? Personally, I don't see us ever seeing $40 again. The cost to get silver out of the ground has skyrocketed. Diesel, labor, equipment, everything is more expensive. Miners aren't going to dig it up if they can't make a profit. Plus, with the industrial demand being what it is, we have a fundamental floor that didn't exist 10 years ago. JP Morgan is already forecasting an average price of $81 for the rest of 2026. They're seeing a higher floor, but an uncapped ceiling. Some analysts are even looking at the derivatives market and saying we are headed for a triple default. If the LBMA, the COMEX, and Shanghai all run out of physical metal at the same time to settle their paper contracts, the price won't just go up, it will gap up. We could wake up one morning and see silver at $150 or $200 because there simply isn't enough metal to go around. Look, I know it's scary when you see a 10% drop in a day. It makes you question your thesis. It makes you wonder if the silver bugs have been wrong all along. But you have to look at who is selling. It's the algorithms. It's the high-frequency traders. It's the people who are playing with paper leverage of 200 to 1. They aren't stackers. They don't care about the metal. They care about the pips on a chart. As a physical stacker, you should be looking at this as a gift. If you like silver at $100, you should love it at $75. It's a clearance sale on the most undervalued asset on the planet. Think about the ratio to gold. Gold is hitting new highs every week, while silver is still struggling to reclaim its 1980 inflation-adjusted highs. If silver were to catch up to its historical ratio with gold, we'd be talking about $300 or $400 an ounce right now. We are living through a historic transition. The shift from a dollar-centric world to a multipolar world is messy. It's volatile. There will be more days, like February 12th. There will be more flash crashes, but the trend line is clear. As long as the US government continues to spend $6 billion more than it takes, and every single day, the value of your paper currency is going to zero. Silver is the ultimate hedge against that stupidity. It's been used as money for 5,000 years, and it isn't going to stop now just because some AI algorithm decided to sell a few thousand contracts in New York. I want you to think about your strategy. Are you holding for a quick flip, or are you holding for the long haul? If you're in this for the long haul, these daily fluctuations are just noise. They're distractions designed to shake the weak hands out of the market so the big players can scoop up your silver on the cheap. Don't let them have it. Keep stacking, keep your head on straight, and keep watching the data. We're watching the national debt climb to $39 trillion by April. We're watching interest payments eat up a bigger and bigger slice of the pie. This isn't sustainable. Brandon Arnold from the National Taxpayers Union called this a huge emergency, and he's right. It's a national security issue. If the world loses faith in the U.S. Treasury, the only things left standing will be hard assets. In the short term, I expect to see silver stabilize here in the high 70s and then make a run back toward $90 as we get into the next round of inflation data. If the CPI comes in hot, metals are going to fly. If the job market starts to show real cracks, not just the low hire, low fire stuff we're seeing now, then the Fed will be forced to pivot, and that is the go signal for the next leg up to $150. We are in the middle of a once-in-a-generation transfer of wealth. The people who hold physical assets will be the ones who come out on the other side with their purchasing power intact. I'm going to be glued to my screen all weekend watching the international markets. If we see another dip, I know what I'm doing. I'm checking my local dealers and seeing what's left in the vault. Because at the end of the day, you can't print silver. You can't manifest it out of thin air with a keystroke at the central bank. It takes sweat, it takes diesel, and it takes time to get it out of the earth. And as the world realizes that digital wealth can disappear in a flash crash, the rush for physical silver is going to be unlike anything we've ever seen. I want to thank you all for hanging out with me today. I know it's been a wild ride, and I appreciate you letting me rant a bit. This community is what keeps me going when the charts look like a disaster zone. We are all in this together, trying to navigate a system that wasn't built for us. So, drop those comments below. Let's talk about the flash crash. Are you worried? Are you excited? Give me your boldest predictions for March. And if you found this helpful, please share it with a friend who might be panicking right now. They need to hear the truth, not the hype. Stay safe, stay smart, and most importantly, keep stacking. I'll see you in the next one. Before I head out, remember that the triple default isn't just a theory. It's a mathematical probability when paper leverage exceeds physical supply by 200 to 1. We are playing a game of musical chairs, and the music is starting to skip. Make sure you have a seat when it stops. Whether it's bars, coins, or even junk silver, just make sure it's in your possession. If you don't hold it, you don't own it. That's the golden rule of the stacker community, and it's never been more true than it is today, February 13th, 2026. The world is changing fast, and the silver market is just the tip of the iceberg. We're going to keep digging into the CBO reports, the Silver Institute data, and the geopolitical moves that matter. Don't let the flash crash get you down. Let it wake you up. This is the opportunity we've been waiting for. Until next time, take care of yourselves and your families. The road to $200 is going to be bumpy, but man, the view from the top is going to be incredible.